नमस्कार दोस्तों। तो समझते सिग्निफिकेंट इकोनॉमिक प्रेजेंस क्या है। नॉर्मली आपकी इनकम, आप रेजिडेंट हैं, डोमेस्टिक कंपनी है इंडिया की, तो आप बिजनेस इंडिया में करेंगे, उससे रिलेटेड जो भी इनकम होगी टैक्स होगी। तो अगर आप नॉन रेजिडेंट हैं, इंडिया से कोई इनकम अर्न कर रहे हैं, दैट इज बिजनेस इनकम, दैट इज टैक्स अंडर सेक्शन 911 deemed to accrue a rise in India. So we have to see whether it is significant economic presence, since you are sitting outside India or might be doing some activity which is not tantamount to business connection, then it might be possible your income treated as significant economic presence, so that your income would become business connection through India, and on the basis of explanation 2A, your income would liable to tax as business connection in India. It may be possible you don't have permanent establishment, but for that purpose your article 7 of DTA would help you. But as per the domestic taxation purpose, we have to see it is significant economic presence, then it become business connection in India. As per the explanation 2A, your business income deemed to accrue a rise in India. So it might be possible you are exporting to India, right? You are you have situated in USA, exporting some material having more than 2 crore. It become significant economic presence, but it would not tax by virtue of you are doing simple exporting of activity, that does not fall under the significant economic presence. So now we just see what is significant economic presence. So concept of significant economic presence is SEP provision intended to tax non-resident which undertake business with person in India. You are a non-resident, undertake business with person in India. So this provision come from the financial year 21-22. Significant economic presence shall also constitute business connection in India. So what is the scope here? Transaction in respect of any goods, services, property carried out by a non-resident with any person in India, including provision of download of data software in India, if aggregate payment arising from such transaction during the previous year exceed 2 crore, right? Or systematic and continuous soliciting of business activity or engaging in an interaction with such number of user, that is prescribed 3 lakh. You are providing some Netflix or some kind of services, that is transaction in the nature of goods, service or download of software data, right? But in India there is more than 3 lakh user, or you are earning more than 2 crore revenue. So it will tantamount to significant economic presence. You would become the business connection in India. Your income would liable to tax as per the domestic provision of the Income Tax Act. So it will fall under the purview of taxation. Section 911 is applicable to you. Your income will be deemed to accrue a rise in India due to explanation 2A. So historical concept basically now goes those days which are going to tax on the basis of residency, on the basis of source. So now there is a nexus in India. There are number of customers in India. India has a huge market, but you are doing business seated outside India because there is a nexus market in India. So this income is taxed on the basis of market India, nexus in India. So scope of business connection is enlarged here. Currently there are no SEP provision. Before that this amendment came in Finance Act 2020. There is no SEP provision. So after this it is deferred 1 year and it is applicable from the financial year 21-22. So SEP provision is there. So as I said, 2 crore threshold limit for revenue is defined, 3 lakh number of user is defined. It is in the rule number 11 UT. So you have to also disclose all information in the income tax return. You are a non-resident, whether it is a significant economic presence, you have to present in the ITR also. So SEP does not override treaty. Basically, since you are eligible to get a beneficial provision of the DTA, you have a TRC certificate. On the basis of TRC, once you have a TRC, you can approach the respective DTA. On the DTA, there is the Article 7 that shows your income would be taxed only if you have a permanent establishment in particular that country. If you don't have permanent establishment, there is no tax, no tax. But as per the domestic taxation, there is a SEP concept, so that is a taxability. But you can might away from the based on there is a no P, you can get beneficial provision of the DTA. So definition is defined cover any goods, services, property carried out by non-resident. With a person, any person in India. I am a non-resident. I am dealing with you for sale of goods, for sale of services, for any property. For download of software, data, anything, it would be tantamount to SEP. So threshold limit is defined 2 crore. I earn more than 2 crore. Or I have a Indian market, there is a number of customers is more than 3 lakh, then SEP provision will trigger. So these factor is not relevant. Where is the agreement is entered, whether in India or outside India. I have a residence in India or not. So NRI is sitting outside India or through India, that is doesn't matter. So let us discuss explanation 3A. First of all, I have discussed explanation 2A of section 911. You will be considered as business connection in India through the SEP provision. Now explanation 3A says non-resident e-commerce operator, suppose Amazon.com or some other website having a e-commerce operator dealing with the customer presence in India. They are dealing through virtual presence. They are sitting outside India. They are just looking customer base in India. So their income, such income attribution is now proposed to tax. This is already in tax. This provision is applicable from the assessment year 22-23. So income from advertisement that target Indian customer. I am paying some expenses, some advertisement to the Facebook. So Facebook, who is a non-resident foreign company, going to tax by virtue of explanation 3A. So income from sale of data collected from India. Some data is collected. So income arise to those non-resident will cover here. Income from sale of goods, services. Suppose Netflix is selling some software services or some OTT channel, getting a revenue outside India. Those is covered here. So these 3 type of services by the non-resident as a e-commerce operator will cover by explanation 3A. Your income would become liable to tax as business income. You have a covered by the explanation 3A. So now I would discuss equalization levy. So it is clear, either you are covered by explanation 2A or explanation 3A. As per the domestic taxation aspect, your income would be liable to tax as business income. But might be possible you are availing some equalization levy scheme. So what is doing equalization levy is levied through the Finance Act, not from the Income Tax Act. Once you go to the equalization levy chapter, you will found your income would be exempt under section 1050. You do not need to pay through SEP route. You simply pay your equalization levy. So there is a 2 equalization levy right now is prevailing in the Indian income tax. not Indian income tax, through the finance act. You would not get foreign tax credit in respect of equalization levy. Suppose I am paying to Google for Google AdWords, for some online advertisement. So I am paying more than 1 lakh to a Google who is a non-resident, does not have a PE in India. So my payment go to Google, or my payment is more than 1 lakh, I need to deduct equalization levy of 6%. So this is the withholding of equalization levy. So this equalization levy is called EL 1.0 as a direct tax of 6% consideration payable or paid for any specified services. जी हाँ, specified services is online advertisement service, that is Google AdWords is doing. This is, this tax is called Google tax. In India, it's applicable once you pay more than 1 lakh. In pieces make a payment, but once the 1 lakh is covered, triggered, you need to withhold tax for entire advertisement amount. Payable to whom? Non-resident. Those non-resident do not have a PE status in India. Suppose Google has a PE in India, then there is no concept of EL, right? Google income would liable to tax as per the domestic provision of taxation. So in that scenario, EL provision is not applicable. So this is a equalization levy, 6% is covered by the deducted by the person who are making a payment to a non-resident. Those do not have PE status, right? So now I discuss what is equalization levy 2.0. So first of all, I covered equalization levy 1.0. I am paying online advertisement, 6% I need to withhold. Another payment I am making to Amazon.com. Normally in India, Amazon.in is available to us for buying the goods. Suppose I make an order for PS5 through the Amazon.com, I buy $2,000, right? So that is a e-commerce operator that sold the goods. Although those are covered by the EL 2.0, I said EL 2%, B as a Amazon need to pay, not person has to deduct. So it is clear from here, equalization levy 6% is deducted by the person who are making the payment, right? Equalization levy of 2%, it is paying by e-commerce operator itself, not withhold by other person who are paying the services. So in my example, Mr. Yes is resident in India, entering into transaction with non-resident, Amazon.com. They make a order to Amazon.com for $2,000 for PS5. The e-commerce operator sold goods to Yash. So Amazon.com need to pay 2% equalization levy on this goods sold, right? Same way, advertisement service is provided by the Facebook to the Yash. Yash doesn't worry for withholding of 2% equalization levy. So only Facebook need to pay. So Google Cloud Services is provided by the Google. Those are non-resident. So Google has to pay 2% equalization levy, not by Yash. So this is our story. Equalization levy 1.0, for which tax rate is 6%, need to be withheld by the person while making payment by me to Google AdWords. I need to withhold, but in respect of equalization levy 2.0, I need to pay by the Amazon.com, by the Facebook, by the Google 2% in respect of their income. No need to withhold in equalization levy 2.0, for which tax rate is 2%. So I have covered here equalization levy 2%. So just for your understanding, the scope of equalization levy was expanded by the government of India in Finance Act 2020 in order to include goods that is sold by the Amazon.com, services, right, Facebook, Google, by e-commerce operator. The equalization levy rate is 2% on any amount received by e-commerce operator. E-commerce operator has to pay tax. No need to deduct by us. To a person resident in India, to a non-resident in India, to a person who buys such goods or both using an IP address located in India. Basically, I have a Amazon.com virtual space at the cloud. Some customer having a IP address for Indian address has made one order to Amazon.com. So I made goods delivery to this person. Then as Amazon.com, I need to pay equalization levy. So e-commerce supply of services mean online sale of goods, that is covered by the Amazon, online provision of service, that is covered by Facebook, online sale of goods or provision of services, or both facilitated by the e-commerce operator. You see, in all cases e-commerce operator is covered. So once e-commerce operator is come, we need to pay 2% equalization levy by the e-commerce operator, right? So yes, example I have discussed. Suppose Amazon has made 20 crore turnover from India, Amazon.com. Amazon has to pay 40 lakh rupees as equalization levy, right? So once the equalization levy is covered, Amazon.com fall under the equalization levy. There is no need to pay tax on the business connection India as per explanation 2A or 3A. My income would be tax free under section 1050, right? Amazon.com has to pay only 2% on 20 crore. No need to worry and anything about business connections, economic presence or explanation 3A. But if I would become the P in India, then equalization levy chapter is closed. Your income would normally tax in India. No need to pay equalization levy. So all things depend upon your PE status. So here I covered 3 examples. Suppose MNO INC, who is a non-resident, payment to PQR INC, both do not have PE status in India. MNO is making a payment to PQR. So MNO no P status, so MNO not required to deduct any equalization levy of 6% because MNO is a foreign company, do not have any P status in India. So why they are covered by the equalization levy chapter? So MNO do not require to withhold, but PQR also do not have PE status, but PQR, same case is Facebook, is providing services as e-commerce operator to the Indian customer, is required to pay equalization levy of 2%, right? So here PQR has to pay because PQR is a no PE status. Those provided services covered by the EL 2.0 has to pay 2% equalization levy. Where the MNO has a PE status, PQR doesn't have a PE status. So MNO is covered. MNO is making a payment to PQR. MNO required to deduct 6% equalization levy. If they would not deduct, what will happen? The expenditure for payment in respect of PQR would become disallowed under section 40A IB. 100% expenditure is disallowed. So suppose MNO has deducted 6% equalization levy, what will be impact in PQR hand? Since equalization levy income is received by the PQR is become the exempt under section 1050. So here PQR is e-commerce operator, not required, not covered by the EL 2.0. So in case PQR has a PE status and those services is through the effectively connected PEL is not applicable, your income would become the deemed to accrue arise in India under section 911 taxable in the head of PQR. So this is our summary for equalization levy 2.0, 1.0, SCP provision, and what would be impact. You have a PE status in India. So I have covered explanation 2A, SCP provision, explanation 3A. So once domestic provision is applicable, you can take a beneficial provision of DTA as per the Article 7. So thank you guys.